Good morning, everyone. How's everybody doing today? Hopefully well. Hello. And my browser works. Yay! We're having some technical difficulties this morning. Let me know if you can hear me good in the chat. And the cam, let me know if that is okay as well. I don't have my sidekick Sasha here. He's on vacation right now in warm Spain. I think he's in Mallorca or something like that right now. Lucky bastard. My cam sounds good. Constantine, I appreciate your stepping in for Sasha. I do appreciate that. Thank you. Hello. Alrighty. Well, I was feeling like I was going to do my normal thing today, but seems that Wall Street Bets really wants the meme stocks to take over the market. And it's hard not to ignore them right now. They are ripping. Particularly, we got one with CLOV. So we're just going to really do some open Q&A, and we're going to talk about meme stocks. That's really all we're going to hit today. And then we'll go to live trading. So hold on one second. Hold on, so I just get some announcements out to my members. There we go. And a few more. Normally Sasha does this for me, but instead it's me. Okay. Alrighty. Prem, good to see you. Anurag, good to see you. And Lee, good to see you as well. I haven't seen you in the Discord lately, Lee, but hope you're well. Hope trading is going good for you. Okay, so let's go ahead and start getting rolling on this one here. Clover. I think this is, I think we are shifting away from AMC to some degree, being kind of the focus and the, short squeeze pressure and the attention. And I feel like we've kind of, the Wall Street Bets crowd and the Reddit crowd has really evolved. And they're not just like focusing on a few stocks and the same meme stocks they had before. I feel like that has expanded and it's evolved, and it's definitely taking over the markets, as we can see with Clover. An enormous move to start this week, over 100% up. Just a massive rip every single day. So, big rip. I mean, like 958, closed around 1289. Then yesterday, a little bit of wacky open, but then just continued to climb higher. We're already about $5+ up from the market open, or from market close. So that's pre-market trading right now. And I feel like this is going to be the next one. As I was watching CLOV yesterday, what was really interesting was the options. And so yesterday we had a very interesting move, and we'll show you on the 5-minute. We'll take a look at that. And so yesterday, CLOV in the early session, this white area is the open session, and the blue is the aftermarket or pre-market. So CLOV starts a rip early yesterday's session. Oh, I just realized I don't have my pen on. 1 second. Need my trusty pen. Mike, 1998B, good morning to you. Hope you're well. Stefano, good to see you. Okay, so we had this a nice breakout pattern here and really good rip. But it just kind of ran into a wall. And, sold off from like 25 to like 60.5 in no time. And part of the reason why, and we were telling our members live in real time, part of the reason why we think, in fact, we even called out, we said CLOV high a day, basically. And part of the reason why was because at this time, there were no more options. The market wasn't making any options beyond the 22 strike. So the 22 strike was right here, and it basically just overshot the 22 strike, and that was pretty much it. So as soon as we got past the 22 strike, there were no more options to buy. Therefore, there was no more gamma squeeze fuel available to really push this stock higher. And so what does it do? It sells off very aggressively, finds resistance right at 22, and then sells off to about 16.5. And that was the high of the day. It did continue to bleed higher. In fact, once it got above the VWAP, it showed continued strength. Nice pullback into VWAP, bases, and nice rip into the close. So, but what was the difference after it started to base and build was that the options market started to open up options beyond the 22 strike. And so they started extending them to 30. And I think right now, the top potential option you can buy once the market opens is a 40 strike. So I'm expecting pretty strong option volumes today on CLOV. And I think you're going to see a lot of options pushing into that 30, 35, 40 strike. If we get really good volumes on that, then that may be the potential strike. 22 is no longer the resistance. 22, 25 is no longer the resistance. It now becomes support. And so when we look at this, this is kind of, the pre-market or the spike highs yesterday has already become a base on pullbacks, which you can see here. Build up to it, breakout, pullback, use this as a launching pad, come higher, it comes right back to it, bounces higher, bounces higher, bounces higher. So if you're not already long CLOV, then to me, in my opinion, the next location that I would like to be adding, we added some CLOV yesterday, late in the session and the aftermarket. So we have CLOV exposure right now, but we feel like if you weren't already long, if I wasn't already long, if I didn't already have positions on this, then I think this kind of 25, 30, 40, 50 area is a really good location that it should find some liquidity. It may not get there. It may just hold this and try and build higher. It may try and build a base here. We do have a clear resistance short term right now, which is around 28.25. And so when you look at that, if the market builds and breaks out of that, then that's going to be a potential breakout location that you're either going to want to initiate potentially longs or look for a breakout pullback to add longs. So if I was not already long CLOV, then I would watch for a breakout of this and either get long the breakout or wait for the breakout pullback and then look to get long. But once we get beyond this, excuse me, I think your obvious targets become 30. And then you want to start looking at where are the option strikes in the option chain that are attracting a lot of volume. What call strikes are attracting a lot of volume? Right now, implied volatility, and let me pull that up. It's not pulling it up. Okay, it's taking over the screen. Implied volatility, last I checked on the 50 delta calls, was right around 240, 250% IV. So that's pretty high. And that's already pre-market before the market opens. So I'm expecting this to continue to increase to 300-400% today, but you're going to want to start to see where volumes are. I think once you get beyond 30, then you got to start looking at round numbers 35 and potentially 40. If 40 is the biggest call on the day that they're offering, you could see a similar playbook. You could see the market ramp up to 40, way up here, maybe shoots a little bit past that. But if there's no new options past that, then it's not going to have the call, fuel, and support to really push beyond that. So only until they start to open up the strikes to the upside would that start to create a situation where that can happen. This may be another repeat, but the way these meme stocks, these short squeezes, these gamma squeezes have been playing out has been a relatively predictable playbook. All these options have been weekly options. They expire on Friday. And so then they expire, it resets the option board. We get a little bit of a pullback in the stocks, a little bit of volatility on Monday, and then all the options start to build. You generally see some good movements on Monday and Tuesday, but then Wednesdays and Thursdays tend to be the biggest rips because all of those options have built up a lot of fuel over the week. And that creates a situation where now you're kind of getting maximum pressure on the stock. And so is it possible we have a rip like we do in AMC last week? Possibly. Depends on how much short interest there is and depends on how many players are short. The AMC thing, a lot of the rip that was part of, the first half of the rip was really the gamma squeeze, but then after that, some large player got stopped out because 3 separate stocks all moved huge right around the same time. And that means somebody probably got stopped out in their big position in AMC, and then their other minor positions, they also had to close those out. So the prices lift on that like GMA and the others. We could get something like that this week, but if I had to suspect, if I had to kind of look at it, I don't know if there's as much short interest on CLOV and as many large players on CLOV as there is, say, there was on AMC last week. So with that being said, I would not be surprised to see CLOV hit $35, $40 this week. I think that is certainly within realm. If we continue to get this really strong option gamma squeeze type pressure, then that can really force that. So there's obviously a few ways you can play this. You can get long the underlying. You can get long the underlying and sell calls way, deep out of the money calls on that. And then, hey, if you could sell like, maybe you get long right around 25, 50, and you feel like 40 is a potential and the 40 calls are selling for say $3, $4, maybe $5. Okay, well, you could do something like that where you get long at 25, you sell an equal amount of calls to cover those shares. And if, at 40 strike, and if it gets to 40, you're happy to be out at that point. You just let it ride till expiry, and that's it. So that's kind of what I'm looking at as potential ways. Another way you can potentially play this is to sell cash secured puts. That isn't a potential option. Obviously, with IV being high, the margin requirements are going to be a little bit stronger, but cash secured puts do help to create that gamma squeeze environment. How so? Well, if you sell, say, 100 cash secured puts at, let's say, $20 on Clover, well, if you sell 100 of those cash secured puts, then the dealers and market makers, they're long those puts. They're on the other side of the market. They're long those puts. Dealers and market makers do not like delta exposure. They do not like directional exposure. So what are they going to do? They're going to have to get long the stock, because if they're long puts, that means that their directional exposure is to the downside and their weakness is to the upside. So to neutralize that risk, they're going to start getting long the stock. That's the second way you can create a gamma squeeze. So with that being said, that's a potential play. The cash secured puts is interesting because if you feel like, hey, I don't want to get long in current prices, I'm happy getting long, say, at the 20 strike here. Well, then by selling cash secured puts here, what you're basically saying is, if the market gets below 20 this week or before expiry, if it gets below 20 and the person I sell those cash secured puts exercises them, then I'm technically long at 20. Now, if you sell them for $4, that person is probably not going to exercise them until they're at least in the money, which would mean it'd have to get to $16 before you even get to break even on your trade. If the market closes above, whatever it is you sold it for and the premium below your strike, then you get to walk away with profit. If the market never gets to 20, you walk away with full profit, the full premium on that. If it gets exercised, you get long at 20. However many contracts you sold times 100 shares. One contract, 100 shares, 10 contracts, 1,000 shares. So cash secured puts is a way to do it. It obviously does. There is certain risk to it because the stock could collapse to zero. So you do technically take on that risk. But if you feel like, hey, I want to get long at 20, by selling cash secured puts, you're going to collect a premium for that potential trade. If you get exercised, fine, you're long at a place you wanted to, but you collected the premium just for that cash secured puts that you sold. So that creates a potential option to play that. If the market just keeps drifting up, then you get to keep the full profit, and that's it. You don't have to worry about it at all. So those are ways you can take kind of those trades without, if you feel like it's going to continue to go higher, then you can sell cash secured puts as one potential option. And if you're right and the market does continue to go higher, then you have no risk of getting exercised. And so you just get to keep that premium. So it's a way to collect an income. So CLOV is the main one that we're kind of looking at right now. I think this is where a huge portion of the focus is going to be. I mean, yesterday's options was insane. 735 million. 735 million. Its average 30-day leading into that was 35 million. We are at 30 million pre-market. It's huge. We're almost at 100% the volume, the average 30-day volume in the pre-market right now. So absolutely insane right now. We are seeing some others that are getting kind of targeted. I don't think they quite have the same fuel. AHT is one of those that potentially does. Obviously, Workhorse is one of them, but AHT, it's a smaller price stock, and I really like the structure on this one here. This is a good structure on multiple levels. Look at the 5-minute real quick. This is a really good structure. So, slow session to start yesterday, then it had a late rip. You're talking from 535, closes around 620, 90 cents, pretty good rip. But then aftermarket, 610 all the way up to 740. So rips up to 740, and it's clearly got, or right around 740, it's clearly got a target on its back there. Other than this little pullback here, the overall base is just below 7. So this structure is very, very favorable to me. And I think if you get a breakout or breakout pullback, if you're not already long, then I would look to get long. We bought some in the pre-market, so we are long this right now, full disclosure. But that's kind of how, if I didn't have a position already in it, that's how I'd be looking to play that one right there. Otherwise, you can look for potential pullbacks to the bottom of the support here or here. But I think AHT is going to attract some of that attention. It's definitely been getting a lot of mentions on the Reddit thread, basically. So looking at that one as well. A couple other trades we're long right now. Skills. We got long on the pullback on 20. We shared this trade idea with our members. Said, hey, we're going to buy at 20. We shared this actually last week and said, hey, if it gets to 20, we're going to buy. We put a limit order in there. It activated, bounced a little bit, came right back. If you missed the first entry, you had a second shot, went right to 20 and skyrocketed. Held the weekly VWAP the last 2 days, and now it's pressing the top of this right here. So it's building another kind of breakout structure on top of all of this and using now the 2250 weekly VWAP as support. If you're not already long and you want to get long, I would consider looking at, in my opinion, weak pullbacks to the weekly VWAP around 2250. That's another potential trade location to add, at least for me. We're already long at 20. We don't need to do anything at this point. But if you're not already long, that would be a potential location to get in on it. So I like skills right now. I'm going to keep holding skills. I think skills is probably, let's take a look at some of the option open interest on skills. Very well supported. So it's got 377,000 calls, roughly 210,000 puts. And there wasn't a whole lot of call volume above 20 as of yesterday, but then that's going to build today. There's about 30% of the options rolling off this Friday, or not this Friday, next Friday. That's the June OPEX. So keep an eye on that one. So that means that this Friday, there's not a whole lot of calls that are going to be monetized, and therefore I wouldn't expect a massive pullback on Friday. Next Friday, however, is a potential for a massive pullback because you have about a third of the options unwinding in this one here. But when I look at this, I think 25 is your next strike. And I think it has potential to get to 30, 35 before it starts to really run into some serious pressure. Let's take a look at 35 on the weekly. Yeah. I don't think it's going to do it this week. I think over several weeks it could do that. Right now it's averaging about $3, $4 a week. We already got almost 3 of that right now. So at that pace, you're probably talking, 3, 4, 5 weeks before it gets there. But I'm pretty bullish on it right now, and I see nothing in the structure, and I see nothing in the price section that's telling me this is going to end as of right now. So I'm going to continue holding this position until I see that this structure and everything is ending on this. Until that happens, I'm just going to keep holding my long skills play on this. Probably take some off the board right around 27, maybe some just before 30, and then try and ride the rest out to about a 35 print. So that's kind of what I'm looking at on SKLZ. Let's take a look at one more. Fubo. I like Fubo. We are long Fubo. So we had, I can't remember where our exact entry is. I think it's somewhere around 27, and then we added at 30. And so we have, and the market's open. So we have that right there. Fubo, looking at option open interest on this one here. 31% of the options rolling off this Friday, so it might see a little bit of a pullback, but overall I feel it's well supported. 350,000 calls, 150,000 puts. Yeah, overall I feel it's well supported. I think this is going to want to continue to build. And Clover already breaking out already. Very strong. Yeah, my students will know this is a very strong breakout structure, so keep an eye on this one here. Okay, we'll do let's take some open Q&A for a few minutes, and then I want to get to live trading. If you haven't already, hit that like button. We do appreciate that. Hit it, smack it, wag it, whatever you want to do with it. Spank it gingerly. Just hit that like button. We appreciate that. Okay, so we got a few questions here. Let's take a look. Colin says skills resistance around 2372. Not really. Yeah, I see what you're saying. All this right here. I just don't see it. I don't see it right now. Like, I mean, look at that. Do you see anything in the short-term structure in the 5 minute, in the 1 hour, or the 4 hour that says, hey, it's really, running out of steam? Do you see any transitions? Do you see, I see the one rejection from yesterday, which was the high, but it continues to be supported by a weekly view up on pullbacks. So I'm not seeing anything there. And so I'm not really looking for, I haven't seen any changes in the 5 minute, 1 hour, 4 hour in the structure that tell me this is not going to, produce any more upside. So I'm going to keep holding it right now. I think structurally, I understand what you're saying here. You're saying, hey, this has, been a weekly support, but this momentum is incredibly strong right now. So yeah, I don't think it's going to hold. I think everything's supported on it right now. Okay, let's take a look. Who else has a question? Mike, 1998B. Euro pound. Let's look at Euro pound. Based on Ichimoku analysis. Okay. I'm not going to pull up the Ichimoku for that, but let's take a look. The real meat in the Euro pound here is between this 85.90 and 85.65 here. Great location to potentially get long. You are in, let's see here. Sorry, you want to go to 1 hour and 4. You want to go to 4 hour and daily. So let's take a look at your 4 hour. Yeah, I like this base between 85.90 and 85.65. I think it's a really good location. I wouldn't take longs at this point if you're not already long, because you're going to have some resistance here between 86.40, 47, and maybe up to here. But I think this, if you can clear this meat right over here, if you can clear all that, get a 4 hour close, say above 86.50, 86.51, then I think you should have a quick test of this, and then you're going to start to really test the meat right around 8,700. From 8,700 to 8,720, you're going to want probably a daily close above that before you can feel like, hey, those stops have been tripped and a lot of that potential resistance pressure has been relieved. So that's kind of what I'm seeing on that one there. But yeah, overall, I like being long Euro pound in this one here. Colin's saying it's a decent RL on the daily chart. Yeah, it is a decent RL, but why would you trade against something that has 4 weeks momentum and is attracting a boatload of retail interest? Like, forget about the fact that it's an RL. Just forget about that for a fact. Do you see anything in the momentum in this right now that says it's going to stop? I don't see anything. You have 4 weeks of gains. You have bigger weekly expansion. So that means momentum and volatility is increasing to the upside. You're seeing more and more interest. Like, candles don't expand on a weekly basis if it's reducing its interest, if it's getting a reduction of interest. If volume is like weakening, if there's less interest in this, less option volume, you don't see weekly candles continue to expand each week. So you're trading against an expansion of momentum that has now been happening every single week for 4 weeks. So while there is technically an RL there, it just doesn't, I don't see anything in the short and medium term that is saying, hey, this is going to stop. This train's going to stop. I'm just not seeing that. So that's my thoughts on that one. Tilray. Let's take a look. Let's go to this one here. Tilray. Okay. Looks good. I like the structure. Take a look at option open interest on this bad boy. 40% of the options rolling off this Friday. Wow, that's a lot. You're talking 900,000 calls, 400,000 puts. That's a lot. That is a lot. Where would I want to get long Tilray? I'd probably, I mean, you do have some breakout pressure here, but yeah, I'd probably want to wait for a little bit of a pullback. I think maybe 1975 potential location, maybe 1853. I think this will probably build some pressure going into Friday, and then as soon as you hit Friday morning, I think it's going to lose. I think it's going to lose some value because of the fact that you're going to have a lot of those options being monetized. And that's going to, I mean, 4 out of every 10 options are going to be leaving the market. And whether it's a cash secure put or a long call, you're talking that a fair amount of those are going to be expiring. So you're talking a lot of that fuel is going to be out. So I think you're going to have strength today and tomorrow. I think Friday it's going to pull back a little bit. And that may create a really good pullback and trading location to get long. So that's kind of what I'm thinking on Tilray, but I like it. I like the structure on it. I think it has some room. If it can clear out this spike high here at 22, then I think you have room for 23.5. And if it can clear out 25, then I think you got room for a high 27s. So yeah, it might be time to get some cannabis exposure again. Yeah, it's a good spot. I like this one. Okay, GT. We'll make this the last one, and then I'd like to get to live trading with the members. Goodyear. Let's see. Goodyear is, interesting history note, Goodyear is actually the first company to make those rubber gloves for doctors. So, a little bit of trivia history there. Not liking that false break. Not a whole lot of options activity. Roughly 70,000 calls, 40,000 puts. Not much expiring until July, so you don't have to worry about OPEX coming up right now. But I'm just not a fan of this. What are you thinking, 1855? If you did this, I would have a really tight stop on this one here. Like, let's say you're long here. I would have a very tight stop on this one here. I would not want much more. I would not want a huge stop on this one here. Because I think if you start getting closes, you know, like below here, then I think you're going to unwind a lot of this and pressure that. Don't get me wrong, it's held this several times. And so in some sense, this location is kind of a must, but it's made higher extensions. And it's a pretty, I mean, each time it's sold out pretty aggressively. Yeah, tight stop on this one here. I would not give it a long leash. I give it a very short leash because I think as soon as you get that 1 hour close below that, then you're headed down to here. Then I think there's some potential for a decent play in it. Like right around 1730, 1740, that's a pretty decent location. Did they have some earnings or bad news? Let's take a look on Benzinga. Okay. Nothing crazy recently. So yeah, that's kind of what I'm thinking on Goodyear. Okay. Alrighty. I think we've covered a lot. We've covered CLOV, AHT, SKLZ, Fubo. All of them I think are very good trades. The Euro Pound trade that Mike that you mentioned there on that pullback to support. I like that one. And then the Tilray, I like that trade. I think it's a good spot. So some good spots from the community. Nicely done. Round of applause. Constantine, you got to get a better broker, man. 31-cent spread is just, that's your broker. That's your broker. You shouldn't be trading 31. Like if it's Tesla, okay, I'm cool with a 31-cent spread. But not a $20 stock. You should not be trading a 31-cent spread on a $20 stock. That's brutal. So that's kind of what I'm thinking on that. All right. I'm going to get to live trading with the members right now. So if you haven't already, hit that like button and we appreciate it. If you haven't subscribed to our channel, you should, and sign up for notifications that'll let you know when we go live. We're probably going to be doing a live session this Friday. So we'll do live open Q&A in that. So I hope to see you there for that. Other than that, good luck trading, everybody. Be smart. Always control your risk. That's the first job you do as a trader. Control risk first, and then and only then should you be looking for profits. If you can't control risk, then you shouldn't be executing trades in the market. So with that being said, good luck trading. I'll see you guys next time. Take care, everyone.